of all, let's talk about the word financial inclusion. Do you know 3 billion people, nearly half of the world population, lives on $2.5 per day, and only 20% of the households in developing countries, they have access to formal banking product like checking account. In such environment in developing countries, usually commercial banks, they have this tendency to avoid giving loan to poor people because of the high risk involved in that. And one solution for these people is to create a self-help group and borrow money from each other. It's like a peer-to-peer lending. And in this kind of borrowing is called self-help group and group lending, and they will create a solidarity group to provide collateral or loan guarantee through a group repayment pledge. And then what happens is if someone defaults to pay the loan, the other family member or group member, they have to cover him or her. So this is a great idea. It worked great in developing countries, and different studies showed that it has improved life, the overall life of poor people, especially women and kids. And one problem with this group lending is at the end of each month, the group manager has to perform the accounting, the classical way of the accounting with piece of paper, or if they have access to computer, with the Excel sheets, and keep track of who paid how much. And then at the end of each month, they have to follow up the payment collections. And this brings a kind of it wastes time of people, and it makes kind of this process not as easy as it can be. So what we have seen here is that by increasing the penetration of mobile subscribers and increasing of the owners of smartphones, we see that there is an opportunity to create a mobile application and cloud-based platform that can automate the whole this group lending process. So if you see this chart, 2/3 of unbanked adults in this developing country, they have access to mobile phones. And another study shows that there are high number of smartphones. And then according to the ITUT report from 2009, International Telecommunication Union, 97% of the world population lives within reach of the mobile cellular network. So all these people they are covered by mobile network, they have cell phone. So if we create a mobile application on their cell phone, they can use that to communicate with each other, create a network of peer lending group, and then perform this loan management and loan application on the phone. So our group lending application can help in these 6 following categories: to recruit a client and fill the application automatically on the mobile application, or perform the group training, tells the people, okay, how to use this application, how does loan work, and etc. Or do the group loan approval each month. So each month they have to choose one people that's eligible for next round of loan. Then to disbursement and customer service, if some of the group members wants to talk to the group manager or each other, they can do all that communication through the mobile application. And then if the collection and recovery is needed, it can be done automatically on the mobile application platform. And then the most important thing, the loan accounting and loan management for the loan managers. That's all these features that this mobile application can can provide for loan members. For the business model, we have I have chosen entrepreneur support model, where our social venture sells business support in form of providing necessary software and business support for this group of loan members. For the revenue stream, we have considered two different access model to the application. First access model is for the normal users, to the loan members. This is a free of charge access. They can install the application, they can see how much money they owe, and they can make a payment through application. There is no monthly fee, no subscription, it's totally free. Then the second access model is for the loan managers. This is where we create a revenue stream. Similar product in the market right now. Our marketing strategy is to make a strategic partnership with relevant NGOs. There are many NGOs and MFIs that they already have established network in this poor area, and they are communicating with these people. They already have existing loans. So making the strategic partnership with these NGOs, it opens a wide market for us. But in second year and third year, it will grow exponentially, because now the company, the brand awareness has been increased, and we don't need to give that much discount, or the number of the trials now that is converting to the real customer, now it's increasing, and our projected our revenue for second year is $1,200,000. And in terms of, and now let's talk about the competition landscape. We see three competitors there: commercial and credit institutes. They are looking to expand their borrowing network. They are looking for new borrowers. And then the second competitor are MFIs that already working in this segment. And the third competitors are future fintech companies that they may want to clone our technology. So for the commercial banks, we think that there are natural barriers for them to enter this market because of the high risk involved with this segment of customers. They historically they don't. The external environment has dependency on many parameters. Local regulation and laws are very important for the firm that and for the environment that we are working in. Any change in a local regulation can affect us, and we should be very cautious and adaptable and respect local rules and laws. Political environment has huge impact in our activity. I have included the SWOT analysis here: our strengths, weakness, opportunities, and threats. That's all can affect us. So in next slide, I'm talking about the management team, administration, and also our CEO has a background of high tech, and he has an MBA. He has a management skill, and also he has worked in the NGO. So he has a mix of good skills that can help the firm to achieve a good startup strategy. For the financial feasibility study, we need $600K as a startup cost to cover hiring 2 software developers, one for backend, another one for the front end. For risk analysis, we have studied which area what can affect us, and I have came up with this CSF tables, critical success factors, for the software as a service related competency. That's our plan to help poor people in these developing countries by creating this mobile application that they easily can go and start a group lending loan and create a better life for their kids, for themselves, and even start their own business. Thank you for listening to me.